On this and the impact that it's had on markets overnight, and we'll have today with Julia Lee from Bell Direct. Julia, gosh, a lot to take in overnight. We had that impressive data in the United States and also the ECB announcement, the one that the markets have been waiting for. Do you think that these combined forces are what saw the market rally?
Well, it was really the Super Mario rally, and we saw the ECB coming out with not a solution for the European situation, but really a monster kicking the can down the road package, and that was enough to drive risk assets. We saw some huge performances. Dow Jones Industrial Average was up by 244 points. We saw the S&P 500 index at 4-year highs, and we also saw the Nasdaq hitting the highest levels that we've seen since November 2000. In Europe, some massive responses there as well. The Italian stock market was up by 4%. We saw the Spanish market up by almost 5%. We saw those 10-year yields for Spanish bonds coming down from 6.45% down to 6.05%. On the Australian share market today, what you don't want to be doing is holding any short positions. And if we have a look at the biggest short positions as of the end of August, they were in stocks like JB Hi-Fi with 20% of the stocks shorted, Flight Centre 13% of the stocks shorted, and also Fairfax 11% of the stocks shorted. And we know what happens when we do see large short positions and you see some good news come out. You only have to have a look at what happened to Link Energy yesterday. 11% of its stock was shorted, came out with some good news, and the stock rallied a massive 41%. So we are expecting to see some big moves on the Australian share market. It will be those high beta areas which outperform. So looking to the industrial sector, the energy sector, the material sector, the discretionary sector to outperform some of those defensive areas which have really done well in 2012, such as the telecom, utilities, the healthcare, as well as the staples areas. But as you mentioned, Kate, it wasn't just all about Europe. We did see some fantastic numbers coming out of the US overnight. The ADP job survey absolutely popping on the upside. 201,000 private sector jobs being added according to this survey, beating expectations of 140,000 and boding quite well for the US non-farm payroll numbers out tonight. We also saw initial jobless claims coming in lower than expected, 365,000 last week, and the ISM non-manufacturing survey also coming in ahead of expectations. So all up, it will be risk on. It's going to be a good day for the Australian share market. We're hoping to hit past that 4,400 point mark, and the highest that the Australian market has been in 2012 so far has been 4,448 points. So the test will be in the next week whether we can reach those levels and surpass it, but looking good for the Aussie share market today.
We have the S&P rebalancing that's expected pre-market today. What are we looking for there?
Kate, a lot of traders try to front run this one and try to guess which stocks will be added and taken away from the benchmark ASX 200 index, and that's because a lot of those index funds and fund managers are forced to hold positions which are similar to the index. And if we have a look at UBS expectations, they're having a guess that some of the additions we'll be seeing will be stocks like Dulux, which is up by about 29% in the last 3 months. Also Macmillan Shakespeare, which is up by 11%. SIA Global, which is actually down by 11%, and Skilled Engineering up by 14%. UBS is also predicting that some of the deletes that we'll see are the likes of Link Energy, which is down by 20% over the last quarter. Also Panoramic Resources down by 36% over the last quarter. Ramelius Resources, which is down by 33% over the last quarter, and Saracen, which is down by 28%. If we have a look at the last rebalancing that we saw by S&P, that was announced on the 1st of June, and the additions that we saw to the index were Cardno as well as M2 Communications. Now, we haven't seen any real big moves in these two stocks since that rebalancing. In fact, we have a look at Cardno, it's up less than 1%, and if we have a look at M2 Communications, it's up less than 3%. That's compared to the market, which has seen a rise of almost 6% in that time. However, on the downside, we did see some deletions, and we saw Dart Energy as well as ERA being removed from the ASX 200 index. And in the last 3 months, we've seen some pretty dismal performances from both these stocks. We've seen Dart Energy down by 14%, and ERA also with some big losses there, down by around about 10%. So we are expecting to see this announcement dropping over the next 10 to 15 minutes, and it is going to be an important one. Usually, because of the shuffling that we see by index fund managers, we see a positive for those stocks which are added to the index and a negative for those stocks deleted from the index.
Julia.